Hey everybody, this is David Skarika. So I wasn't going to do this one for the beach because, doing a stock chart of the day, it can be difficult to try to think of a new thing every day, So, but I was thinking about today or Tuesday was an interesting day. I'm doing this Tuesday night, so I'll post this Wednesday morning, and it was really interesting to me because we saw the semiconductors completely fall apart. So early in the morning when they were down about 5-6%, they ended up down about 7 or 8%. I did put a short on. I actually was thinking about doing it last week, but I wanted to see, how the market traded. And it really reminds me of the fourth quarter or last 4 months of the year 2000. So for those of you who are unaware, the Fed had basically stopped raising rates like now, but then they didn't cut rates a little later to January 2001. But you had this really close election, just like now. We had a tech bubble, just like now. And the S&P made a double top, just like now. So I'm going to show you the S&P chart. Now there was a little different. And the NASDAQ was lagging on that summer rally, just like now. So what I want to show you is in the S&P, I'll show you below. And maybe we'll do this in parts. Maybe today we'll just kind of look at the S&P in 2000. You see the S&P had like this correction. There was a bit of a spike in the VIX that spring. Then we rallied into the summer. And I just remember it. Even though it was 24 years ago, I remember, because I had been calling since late 1999 that this was a massive bubble. My first book, Stock Market Panic, was published in October 1998. And it talked about how we were in a bubble in the stock market and gold and commodities were bottoming. And that's kind of what happened over the next decade, really the next 13 years into 2011. And gold commodities would lead and stock market would lag. And of course, I just talked about the entire market, and then the bubble became extremely specific. So I'm just going to go down this little hill here to obviously the .coms and the tech stocks. So, but if we go look at today, we'll look at the S&P. Maybe we'll look at the NASDAQ tomorrow. I might do a little more charts tomorrow, but let's just look at the S&P today. And what you'll see is I'll have the S&P chart. Go to the addictedtoprofits.net. The charts will be there below this video, and you'll see that the S&P in 2000 had that rally, then started to fall right after Labor Day, and basically fell into the rest of the year. And actually, there wasn't a really significant rally other than a few weeks here and there till about January 2001 when the Fed cut rates, and it was an emergency cut. And then actually the market continued lower after that little rally until March of 2001. Rally had a strong bear market rally for 2 or 3 months and then rolled over into 9/11. So now we've seen this double top, but it's a little different. We have this bust, the VIX spiked 65. That was almost like the warning shot across the bow. And then if you go look at semiconductors, we'll go look at tech stocks, we'll look at them again tomorrow on Thursday. And you'll see that they're very lagging on this, just like the tech stocks rally lagged in 2000. But like I said, the S&P has this double top and then began to kind of roll over. So, that was why I think there was such complacency in 2000. Because even though the NASDAQ, I think it got to 41 or 4,200, or maybe 4,300 during that summer rally, the high was 5,000, but the S&P got right back to the high. So everyone just kind of like, oh yeah, the bull markets can continue. And I remember right after Labor Day in 2000, when everyone got back to work, the market began to sell off. And we kind of saw that yesterday. So, is it just one day? But I just when I look at the failing rally of a lot of these sectors in the last, say, 4 weeks, since that big bust in early August, I really see now you have the opportunity. And I've talked about in the past, I'm a big seasonal guy. Even last year in a bull market, we had a nearly 10% correction in the S&P in September and October. Because I remember I shorted some stocks and did actually pretty good on those shorts, during that. And then I got out of those shorts in late October, early November, because it was obvious that the market wasn't going to continue to fall. So at the very least, I would think something like that's going to happen. But this looks much more toppy. Obviously, market cap to GDP is 200%. So I think, again, like 2000, we're going from, we went from rate hikes into the Fed doing nothing to rate cuts. And maybe when we'll get the first, if the market does start to roll over here, maybe they'll only do a quarter in September. The market won't like that. So I do think the economy is weakening. And then maybe when they do kind of a first intraday type cut, that's when we'll see the market really rally, you know? So, you know, like for a significant point of view, a few weeks, a few months, etc. So I'm going to leave it at that. So stock chart of the day today is like, we're kind of remembering 2000, election year. It looked like an extremely close election, just like this year. A bubble was going on in tech, and the Fed was moving from, you know, kind of raising rates to no rate hikes to cutting rates. So very, very similar. And in the fourth quarter of 2000, industrial production really, really slowed down. We started to enter a recession. So I think it's kind of similar. So it will be very, very interesting to see. And like the thing is bad news going to be good news? You know, if the jobs report is weak, are people going to be like, oh, that's great, the Fed's going to cut? Or they're going to be like, oh no, man, now this economy is finally really weakening and we're probably entering a recession. And with that case too, we have to remember these market valuations, price to sales, price to earnings, market cap to GDP, they're not priced for recession. They're priced for still a kind of booming economy. So I'm going to leave it at that. And yeah, tomorrow we'll take a closer look at maybe the similarities between the NASDAQ back in 2000 and it now. Thank you very much.